Welcome back, guys, to another roundtable. My name is Adam. With me once again, I have Rusmin.
Hello.
And Victor.
Hi, everyone.
Thank you so much for joining us. Today, we're going to talk about Meta or Facebook, and its price to earnings ratio right now is at 9. That is tremendously low. I mean, just to give you a context, right? Usually, what is the PE ratio for the overall S&P in general?
I think on a past 10 years average is about 20, around 20.
Yeah,
15
to 20, right?
Yes, yeah.
And Meta is at 9.
Yes.
Right? So this is a really, really low price to earnings ratio. And then, of course, you're going to find out whether there's actually an opportunity to have a look at Meta.
I think it's their lowest PE.
I've not seen this before. Okay, so we're going to find out the reasons why Meta has crashed, basically. The reasons behind it and whether there's an opportunity to have a look at this. All right, so let's just go straight into things. Why has Meta's price come down so much?
Okay, so actually they come down from the peak all the way to the latest trough. I think there's a few factors that's really affecting them, right? The first one that really caused the big drop in them in the early months, right, is actually the Apple iOS changes, right, that affects their advertising. Then after that, there's a lot of sentiments that the competition of TikTok is very, very strong, is fighting them. And then the recent third quarter result, they came out that their revenue actually decreased by 4% because of the ad slowdown. But actually, their constant currency is about plus 2% because of the Forex. Then the main thing is actually there's a significant drop in their operating income, right? In the third quarter, they dropped by 46%, right? And of course, the management also, which is the CFO, says that moving forward, they're going to spend more on growing the losses of the Reality Lab, because they're going to grow that business, right? So you're going to expect more losses in 2023, which is the reason why there's a drop in 46% in the operating income. So I think investors don't like about that, right? Then after that, when you look back at their free cash flow, they literally dropped their free cash flow significantly to, I think, 173 million. That's a very big drop compared to the previous quarter's free cash flow, right? Because there's a significant increase in capex that they're spending. So these are all the factors that actually caused the share price to actually fallen significantly.
And of course, the last reason is a lot of people don't like Mark Zuckerberg.
Yeah, I think the media just don't like him, right? I think every time anything bad, the media just blasts about him.
I think the media just goes for eyeballs and clicks. But I think the thing with Zuckerberg is, I remember the 2016 presidential elections was very antagonistic on social media. Yeah. And part of that was basically Facebook allowing these kinds of views to just be broadcasted everywhere. And he just said that I'm not in charge of censorship. And a lot of people were like, sometimes you need to censor. But anyway, that's a different topic and discussion. Yeah. We're not going to go into that. But basically, it's been a bad year for Meta, right?
Yep.
Advertising is weak right now. There's competition from TikTok. And then, of course, they're spending so much on Reality Labs, which is their segment for the metaverse, which we've talked about before. But we're going to dive right into the metaverse right now. They're spending so much money on the metaverse. How much have they spent this year so far?
About 9 billion.
9 billion in losses, right?
First quarter, 9 billion losses. Yeah, correct. And they expect it to grow, in 2023 based on the cost transcript.
First 3 quarters, you mean, right?
First 3 quarters.
Yeah, 9 billion. So
you look at compare this to the normalized earnings. I think over the last 1 year is about 20 to 25% of their operating income. So that amount, 10 billion, which they expected to set aside to be spent on this reality or metaverse, right? So that's actually quite a lot of money. Yeah,
it is a lot of money. Because do you know how much the original cost for the iPhone was? iPhone 1.
I don't know.
1 billion?
150 million. Not 1 million.
I say 1 billion.
1 billion. Okay. 1 billion it will be.
I thought that was in 2000.
Before 2007, right?
Yeah.
So I mean, yes, you can adjust it for inflation.
Yeah.
But basically, 150 million to develop the iPhone, which was a groundbreaking product.
Yes.
Yep.
But then Meta is spending billions on the metaverse. And the thing is, how many of you? I mean, this is 3 of us here. All right. But how many of you actually think the metaverse is going to come true? I think that is the question mark that a lot of people have. Yeah. So what do you think?
I think that's the thing. A lot of people don't believe in the metaverse dream, right? Yeah. That's why the share have fallen a lot. Yeah. Right. So I personally, I think probably AR will come before VR.
Yeah. Do you think so? I think VR is actually here. Yeah. Because we have, I'm a PlayStation user myself. I have a PlayStation VR thing. And You have the Oculus, right?
Yeah, I have an Oculus Quest 2, which I've sold. Okay,
Yeah.
and that could be the reason why the share price
You can
dropped.
tell us a bit more about that.
Yeah, I mean, from the user point of view, I really like VR experience, right?
Yeah.
Especially if you're into games. I think VR gives you the different dimensions of playing games all together.
It is
right?
very
So
immersive.
and
it
you
is.
know the if you play horror games, it can be quite scary on PS5. But you play horror games on VR.
Oh my god.
Oh man, it's different level.
I've not
altogether.
tried that, man.
Yeah.
I will not dare to play Resident Evil on
Yeah.
in VR.
Yeah.
Yes.
So as users, I really believe that VR will be the future.
Okay.
Right. So it's just that at this stage, there's limited games,
Okay.
and because of limited games, you have attract lesser users, and when
Okay.
you have lesser users, of course you're gonna attract less developers, right? So
Okay.
it's a chicken and egg thing, right? So this is what Meta is trying to do, right? By spending so much money to invest in all the equipment, and but then the recent launch, they launched one product, Meta Pro, the Quest Pro. It's very pricey for end users, especially, but they are targeting at the professional. So that is something where I don't know how that is going to click in the real world, because the battery only lasts for a couple of hours,
Okay.
So unless you're meeting, you expect to be less than 2 hours, and then you have to recharge it. It's kind of a hassle.
Yeah, I mean that's the thing with VR. It's you wear it for 1 hour, maybe 2
hours.
It's
It
tiring.
can be quite tiring. Yes.
Yeah, and the thing is, when you talk about games, games is a great application for VR. But it's not just games. I mean, if you want to conquer the world, like Meta wants to do, right?
Yeah.
You can't just rely on games.
Yes.
Yep.
You have to have like a real metaverse in a
Yeah,
sense. Like
yeah.
people want to go there and I don't know do what, right? I don't know. Is that going to happen?
So I kind of believe that I think VR will exist in the future. It's just that it's almost like a e-commerce and physical retail, right? So physical retail is still about of the market share. So VR will probably contribute teens of the market share in terms of time spent of the users. But as a user myself, I don't want to carry a device that is so heavy on my head for long hours. So maximum 1 or 2 hours a day, I think that's more than enough, right? But then now there's still insufficient games, insufficient stuff that I can do on the metaverse, right? So that's why I sold my device. Yeah.
There must be a reason why you want to go into VR.
Yes.
Right. It's not, I mean, besides games, big games you can play 1 hour or 2 a day, but like we use our phones throughout the day, which is what Facebook used to be, right? You had to use it all the time.
All the time,
you're just in. So VR has to have that kind of application where there's a reason for you to go in multiple times a day and just get out, get in and get out. So I don't know if VR has the application, but you were talking about AR, which I think that has the potential for you to actually be in that world multiple times a day. So I think AR has a lot of potential in that sense. Yeah.
I think the thing about AR is it still mix between the actual reality and and
you
sort of
become like Iron Man, right?
Yeah, correct.
stuff.
But it's like your wall and you just use it and you wear your specs and all this, right?
Yeah.
But the VR is like you are going to another world, Yeah. So that is still, I feel there's still a long way for that.
So I think based on numbers that we have from Wall Street Journal, they have their Horizon Worlds, which is basically the Meta Quest, social apps. Okay, and so they wanted to target 500,000 users, right? But then they only, I think as of today, based on the leak documents, I think they are actually less than 200,000. So they're way behind their KPIs.
Right. So I think the metaverse is still very much in its infancy. I think, this is my opinion, I think the metaverse will come true. There will be some use of, I guess, meetings, Zoom meetings, design, where I guess they want to go into the professional space and then hopefully that trickles down to consumers and stuff. Where you put on a VR. I mean, now it's bulky, but if you're going to spend billions, you're probably going to
like a
get
glass.
it smaller.
Smaller, like how your phones have evolved over time as well. So I think the metaverse will actually come in some way. And I actually think AR will be actually the key here, actually.
Correct.
Yeah, so I mean, I don't know what your opinion is. You can put them in the comment section whether you think the metaverse is actually going to come true and what you think, is actually going to happen or not.
I think people who don't try metaverse or VR, it will probably, it's not going to come true, right?
Correct.
You have to try it.
So we have tried it.
We have tried it.
Yeah, we have tried it. So I think it's actually going to come true. Whether Meta, the company, is going to be number one in that space, I think there's a question mark.
There's a question mark, yes.
Yeah. All right. So I think they're spending so much money.
Yeah.
I think, and the thing is, when it comes to investments in something like that, yes, it's really expensive. How do you justify it? There's a lot of question mark there. But to make all this possible is basically the ad business still has to be going
the core
strong,
business has to be intact.
which is for Meta is the ad business.
Yes, correct.
Yeah. So if the ad business can kind of like pay for it, maybe they have a shot.
Yes,
and
correct.
yeah, of course, with the ad business, you need to have the users base, right? So you look at the monthly active users for their Facebook. If you compare with their daily active users, the engagement is still about 67%, and it's still growing the number of users. So Facebook is still quite relevant. Okay, even if within their family or apps, the numbers are growing, they are getting more users, engagements are holding still. Okay, so it's the products that I think Facebook own, like WhatsApp, Messengers, Instagram, and Facebook, right, the main one, is actually still quite relevant in the market. So I think as long as there's eyeballs on their apps, advertiser will still come back. Okay, so the advertising is still quite will still be relevant in today's world. Of course, there are competition from the TikTok and all that. So the Reels also have been doing very well. They are transitioning into the short form videos. And at this stage, of course, what we are looking at right now is that Facebook is going through a period of down cycle in the advertising business. Okay, if you look at the average revenue per user worldwide basis, it's been all-time low. It's even lower as compared to the COVID.
I mean, COVID was a boom, right?
Was a bad during the first
few months,
3 months during the sharp lockdown in the period of April to May, that period. Yeah, so that was a big hit for them. Their year-on-year growth rate was only like low single digit. But now we are looking at single digit, not even single digit, it's negative growth rate on a year-to-year basis in terms of average revenue per user for their Facebook app itself. Okay, so that's why I think that's why you are seeing a very slow growth in terms of revenue for Facebook this year.
Yeah, so I think that's kind of like affected everything, because if you're spending so much on the metaverse and this core business is still like doing gangbusters, I think people won't be so upset about how much you're spending. Of course they will be, but now it's kind of like this is weakening and you're still spending so much. And the question is like, now with like you said, iOS changes, the privacy restrictions, would you think the core business is still intact? Will it still kind of like keep printing money in a sense? I guess.
So I think we have to really look at the third quarter numbers with a more objective way, right? If you look at the cost of the drop in terms of the operating profits, about 46%, is because of the significant increase in their costs and expenses. So if you look into their 10Q financials, right, you can see that the costs and expenses are break down into 4 things, right? Your cost of revenue, your R&D, marketing and sales, and general administrative expenses, right? So actually the main one that really increase the expense is their R&D, which increased by 45.2%. In fact, the rest are just like marketing and sales is probably just 6.4%. General and administrative expenses increased by 14.9%. Cost of revenue actually reduced, right? So the cost and expenses increased, right? Partly there's a few things. First is the R&D increase, right? And the marketing increase, right? Is because it was all driven by increase in headcounts for their family of apps and reality labs, right? Okay. So this is the two. So that means they are spending a lot in the reality lab, right, to actually cause this big drop in the operating profit. But in fact, if you were to look at their third quarter, their family of apps operating income is still about 9.3 billion. It's still positive, right? It's the one that's dragging down them is actually the reality lab, which had a record losses of 3.6 billion for that quarter, right? Which dragged down the operating profit by significantly, right? So in the event where they really cut back on that, you can see that there's an improve in terms of the profit moving forward, right? But of course, that being said, that the like I said, the cost transcript, the management actually says that they're going to continue increase the losses, right? And that was at the point of time of the cost transcript. But just I think yesterday or so, Meta actually came out say that based on Wall Street Journal, that they're going to cut 10% of their expenses in the coming months, right? So they're going to start laying off their staff, right, in the market, right? So if you were to look at the 2020 and 2021 combined, right, they actually hired a lot of people, about 27,000 people at that point of time, right? And in this year, 9 months itself, right, they already hired 15,344 people already.
All right.
So I think if you read the Wall Street Journal article, right, they actually mentioned that Mark Zuckerberg said that he's accountable for the mistake that he's made. That's why they are cutting down the expenses right now. So as much as they say they're going to spend more here, right, I think the recent layoff sounds like a U-turn,
Okay.
Right, that they're going to reduce the expense and all this. So it's still questionable, but we still have to see the next few quarters to understand what is their stand. Are they going to continue spending, or are they going to pull back on that, right?
All right. So basically, what you're focusing on right now is basically the expenses.
Yes,
I think which is the main gripe among the market right
Yes,
now.
correct.
Basically, they're just spending too much.
Yes.
Even though the core business is still making money,
Yeah.
they're just spending too much.
Yeah, so investors is concerned about that thing, and another thing is the free cash flow. So if you look at the free cash flow, it have dropped significantly. I think the previous quarter was saying 4.4 billion, but right now it's like 173 million, right? Because this quarter, right, they spent significantly a lot on the capex, and the capex mainly is because they tell you they are in the investment cycles where they are spending more of what I call a development capex instead of maintenance capex. I think when it comes to capex, right, I think investors are more worried about maintenance capex because they are the capex that don't bring in additional revenue. But right now they are trying to spend up to expand their AI capacity, which they're going to spend to build the next generation hardware to support their AI hardware, right? So they bought a lot of very expensive servers, network equipment, and
data
also they built
centers,
new data centers to build so that they can support, because this AI that they are spending is very crucial for their business and it requires a lot of machines. So they want to, based on the AI, right, to determine the trend and also for the advertiser to get the data instead of relying on iOS. So this is AI is to help them to fight the iOS changes that affected them.
Yeah, to put it simply, basically they're spending money to make sure the users are spending more time with their apps by giving them better recommendation, especially if you're using Reels. If the video that you scroll is interesting and then you keep scrolling, it's very interesting. Of course, the time span will increase. So they are doing this AIs on the behind the scenes to do all these magic things.
Okay. Correct.
And of course, on the advertiser sides, they are making sure that the conversions are there, so the advertisers will come back.
Correct. So the computing power have to be very, very high. So that's why the capex is very high, because they are spending on very high quality computing power to support this machine learning, right? To fight the iOS changes, right?
All right. So costs have gone up, and then basically profit has come down.
Correct.
And then that's because, and then of course prices have come down as well. So all of this, I guess prices mainly have come down. I think that's the main thing. So because of that, the price to earnings ratio for Meta is now at 9.
Correct.
It's screamingly cheap.
But because I think the thing about Meta is actually everybody is focusing on the bad stuff, but they didn't realize that they also are growing other parts of their business.
Yeah.
Like
They do have the click to messaging ads, which nobody mentioned it in the media. They're just slamming the metaverse spending, right? But their run rate about 9 billion for their click to messaging ad. Basically, businesses can basically put the ads on Facebook or Instagram, and and the user click on it, it will bring them directly to the messengers or even WhatsApp. Okay, so the run rate for that I think is about 9 billion. Okay, so basically they're monetizing the messenger app, and of course even for WhatsApp itself, it has just passed 1.5 billion run rate. Okay, that's growing on a year-to-year basis 80%, which is amazing. It's up and coming, right? And I think Mark Zuckerberg is expecting that this click to messaging ads and their paid messaging apps is going to become a big bulk of the business in the future ahead, right? So
there's still room to grow in other areas of Meta.
Yeah,
right.
And then not to forget that there's still a transition from stories to short form videos, right? So that run rate for Reels is actually bringing in advertising dollars. It's about 3 billion. They are still behind about 500 million, and they expect to take about 1.5 years to become a tailwind for this.
So these are the positives.
Positives,
correct. And the Reels are still taking up market share of TikTok right now.
Yes,
right?
So we know all about the negatives because the media has like screamed about it. These are the positives. So at PE 9, what will you think about that?
Yeah, so that's the question, right? Because if it was based on the call transcript that they say they're going to continue to burn a hole on the Reality Lab for 2023, and plus the current down cycle of the advertising, right? P9 may seem expensive because they may continue to decrease in the net.
So you're saying the profit is going to come down somewhere?
Yeah, that's correct, right?
Okay.
But then Mark Zuckerberg did a very fast U-turn, right? And they're going to start laying off and reducing expense. All right. Just recently, right?
Okay.
So if they were to pull off that and the advertising come back, then probably P9 now is cheap. So there's still a lot of question marks. So I think there's still few quarters to observe before you can do anything.
I think a big part of the equation is the advertising income that needs to come in, right? But now because of macro uncertainties with Fed hiking the interest rate, I think a lot of businesses are feeling a lot of pressure on
so they pull back on the
inflation costs and also borrowing costs. That may continue to slow down in the next one or two couple of quarters. So unless if you are in for a long term and you really believe in metaverse, or you believe in their paid messaging apps, the monetization of WhatsApp and Messenger is going to overtake the business. Plus, on top of the recovery of the existing business, the advertising, I think Facebook at this price is very attractive.
Okay.
Yeah, but
yeah.
But then if you look at it from the negative point of view, if you don't like metaverse, the amount of money they're spending, obviously, nine times is not cheap.
Yeah. I think there's only the only thing that can cause Facebook share to really go bounce back up, right? There's must have either one of these three scenarios, right? The first scenario is the metaverse hit a jackpot.
Okay.
Right. So that definitely will push up the share price of
so somehow we all become
Meta.
Ready Player One.
Yeah, correct.
Okay.
Right. The second scenario that happens is that they literally cancel off the whole metaverse. They write off, they focus back on their free cash flow, they buy back their shares, right?
Yeah.
So because now the metaverse is the one that pulling down the profits, right? But the actual business is still generating profits.
This is what a lot of investors want them to do.
But it's not going to happen.
It's not going to happen.
It's not going to happen.
Because Mark Zuckerberg has a
He's
voting
all in
power.
on it,
Yeah.
right?
But if that happens, then that's the right time to invest, because they're going to buy back shares and all this. Okay.
Yeah.
And the third scenario is that the advertising actually
come back
strongly, and they manage to contain the expenses, reduce the expenses, and they use the assets and they still get able to fund the metaverse.
Alright.
Everything's okay, right?
So
So
the-
these are the three scenarios.
So the third scenario is actually quite plausible, right?
Yes,
The
right.
the ad business could actually grow stronger.
Which, it could happen.
It could happen.
Yeah, but there's still a lot of overhangs in the next couple of quarters.
Yeah.
Yeah, right. But
So,
of course, but the thing is, there's always this thing where you say no matter how much you earn, if you spend more than you earn, there's no point. So like even if your advertising business is so well, and you just keep spending.
Yeah, correct. So that's the thing, because if, like I said, when the cost consumption came, they said they're going to continue to burn a hole in the reality lab, right? But then now they're going to make a U-turn. It seems like they make a U-turn, right?
Alright.
So the question mark is now which direction are you going?
All right.
So we don't know, right?
So we don't
we
know.
need to wait for the next quarter to listen to the transcript, right, and see what exact direction that they're going. Okay, because now there's a very fast U-turn.
So I'm going to ask you guys really quick: PE9, yes or no, or are you going to wait by the sidelines?
No, wait by the sidelines.
Yeah.
I'll wait by sideline also.
So that's basically it.
Yeah,
so
I'll
even
wait
at
for
this
the first
price,
quarter and second quarter.
you want to
results.
see what they actually mean
The next quarter results, sorry.
when it comes to the expenses and how they're going to spend.
Yes, correct.
All right.
Yeah.
So that is what we think about Meta and Facebook. I mean, it's really cheap at this point in time, but there's so many uncertainties. So like I think you were saying when we were talking about it's cheap for a reason.
Yeah, it's a cheaper reason.
But again, it really depends on you as an individual investor,
Yeah.
what your risk profile is like, or whether you actually believe in the metaverse. So there's no recommendation to buy or sell, Meta or Facebook, any stocks that we mentioned during this roundtable. Please do your own due diligence. There's a lot of things going on.
Yeah.
But I think we wanted to highlight things that are happening with Meta. It's a very dynamic business.
Yep.
Very exciting, actually. I actually like reading about the metaverse and stuff like that and know what's going to happen.
Yep.
So I hope that was a really good update for you, and if especially if you're already an investor and you're in it, and like
You're down.
in a way, yeah. So I hope that was really useful for you, and I think that's a pretty good wrap up, right, guys?
Yep.
Yeah.
All right. So my name is Adam. That is Risman. That's Victor.
Thank you.
Thank you so much for joining us. I hope you enjoyed this roundtable. Please hit the like button. Tell us we're doing a great job. Of course, any questions about Facebook Meta, put them in the comment section and subscribe to our channel. Many more roundtables coming up, and we'll see you around again.